right, the numbers are out. Let's see what they got. Not seem to have any effect on the stock market. It seems kind of relatively quiet. So the numbers were exciting. Continued jobless claims at 1.823 versus 6.99. So that's you can see here in the beginning they took them up about I'm going to say 20 some odd minutes before they released the information. They took it up to about up to 22 on the S&P, 4,122. And let's make sure my sound is right. I'm just going to double check that. There we are. And so from that action, you can see the stocks fell down to 10, and now we're back to 14, and we'll see what they do. Because tomorrow, now they must be putting those calculations into tomorrow's market, which we all know the markets are closed tomorrow, so that makes it even crazier. So it's going to be interesting, as usual. And the dollar index keeps on giving us that. That's the monthly. Let's go back to a daily there. And the dollar index keeps on doing that slow, steady burn down. Nothing major, just slow and steady grind, heading down. And the pairs trades are all firming up. Metho, welcome to, I guess you could say this is TGIFT. So what it really is it's thank goodness it's Thursday, which is also Friday. Indeed, for the world, because I believe we're going to be seeing most of the markets are closed tomorrow, and then they're also now the United States is open again on Monday, so we'll go from there. It's right, Doc. Sound good. Oh, thank you very much, Kay. I will change my account a moment. It's me, Jamar. All right, no problem. How you doing? There you are, J.A. Cool. Yeah, it's the numbers. They look like there was we knew that they weren't going to be good, or maybe we knew that they weren't going to be bad. I don't know what's the way to describe this. We knew that they were going to have more. I knew that part. There's been talk that there was going to be more unemployment. There's going to be some pressure, and they're saying that tomorrow's number is going to be really wild. So I'm not sure, but I guess we just saw the volatility of the day. When they started taking it up to the 22, I thought, uh-oh, they're going to run it. But, they released the numbers 15 minutes beforehand to the news agency. So the number was out there, and notice that, when we show you the, like right there, notice that they released the number to the news agencies somewhere around here, I guess it is. Let's see, where is it at? Right around in here, they released that news. And you can see there was even a little chatter about 3 minutes beforehand, or I guess like right in here. They released something, and obviously the pressure was on. So they knew that the number was going to be as bad as they were expecting, which is bullish for the market, which is funny, because numbers are bad, which is classic at this point in time with the way it works. And what's good is bad, what is bad is good, and takes the fundamentals and makes them very confusing at the least. I think that's the way to say it, at the least. So we just put up with it. I guess that's the only other way you can say that, is we put up with it. So in other words, we just accept the idea that good is bad and bad is good, and no worries. I guess that's how you look at it. It is odd. I can only laugh at it. And so anyway, let's not worry about that. Let's go look at the products. And let's take a look at the euro and see what the euro is doing this morning. And let's see the dollar index on J4X too. There it is. There, it's still in that daily sell. For I don't know how long that is, but it's been a while. It's with a 6, 7. This is the 8th day in a daily sell. So that pressure's been on. It's been in that weekly sell for a while up in here. So, we're seeing the dollar go. What I kind of want to consider is the dollar should be bouncing between like 96, 97, 95. Not where it was up at 115, 120 or something like that. It was way overpriced. And so I think we're seeing now is that action. It's starting to actually occur, which is a good thing. What else can we say about that? I guess that's about it. Let's go take a look at the euro, unless someone wants to see something in particular. Right there, there's the euro. And the euro is kind of quiet. You know, the last 2 days they've driven it close up to the 110 area, but didn't make it. And then yesterday they pushed it down. It's still in the daily buy, still in the weekly buy. Not really concerned. I think that, you know, I guess the best way to describe it. Yesterday we took apart the idea of the BRICS. You know, we tried to figure out how would you trade the BRICS. You know, I keep on reading like. Every day, they keep on telling us that the BRICS are going to be taking over the dollar position very soon. It's not going to be very soon. Do they have a chance to develop something? Yes. Is it soon? No. Just because Jamie Dimon puts a little scare into the quarterly newsletter, you know, everybody starts to get excited, you know, and I like Jamie's work, but he is a salesman. He's not a trader. So, you know, his first job is to sell you an idea. His first thing is not to actually trade and make money. If he did that, he wouldn't be Jamie Dimon. As I sip my tea. You know, the BRICS I was reading this morning, they were talking about the idea of linking their brick to gold. I thought, my God, how's that exercise out? Every time they come up with these suggestions, somehow or another, the reporters that are writing them forget that if you're not able to exercise something, then it won't really matter. No one's going to pay attention to it. So, you know, it's just another day. But I've come to the conclusion that, you know, yes, the BRICS have a chance someday, but it's not someday soon. And I think that's what it really comes down to at this point. They do have potential. You know, if they can clean up their economies and their currencies and so forth over time, they could become a more dominant factor. There's no doubt about it, but not now. So, but at least I have some great ideas how to deal with it. You know, how to, I'd welcome it myself. I find part of our inflation in the United States, and for many years on Wall Street, we always thought that being the world reserve currency is a problem. It's not a pleasure. You know, it's a hindrance to our economy. It's not a helpful thing. As much as they think just because we have strong dollars, we can buy everything in the world. You know, that type of thing. Anyhow, that's that. We're looking at the euro, and that's where we are. Cable. See what the cable's up to. And, let's finish off the euro over on J4X, too. There we are. And you can see right there, a little curve, you know, it's trying to head back down a little bit. I mean, it's had a good run. So, I mean, someone's got to take a profit somewhere. I mean, that's the way markets, they go up and down for the idea that profits. Oh, do you think, Doc, that will be some currency with a ratio to gold again? Nah, I don't believe it. No, I really don't see that, because you would have to be able to exercise it. And who is willing to... You know, I saw a headline this morning that said, what was it? It said that, I didn't go into it. Let me see if I can find it. And it's a perfect example of your question, too. It was in Zero Hedge. And the headline was, central banks have not stopped buying record amount of gold. And so let me see if I can find that. Because jobless claims explode higher after BLS revision. Tech layoffs in 2000. Okay. Let's see, small business bankruptcy, how long? No. Flat? No. And I didn't really save it. I didn't find it to be, the why the rain needs the dollar to be the global. Oh, that's an interesting one. Okay, there's one here. It says, why the rain needs the dollar to be global currency. If current trends continue, the U.S. will find itself facing a new and enduring era of stubborn price inflation, right, and weakening geopolitical power. But that's not a reason why we want to be world reserve currency. It's the opposite. We blame part of that for doing it on a fundamental level. We have to print more. People want to use it. Here, the central bank gold buying shows no signs of slowing down. I think that's the perfect example. So why, if they're buying so much gold, why would they be willing to Why would, say, the Russian Federation Central Bank, the Chinese, the People's Bank of China, and Brazilian and so forth, why would they be willing to give up their gold to have a currency? You know what I mean? It wouldn't make a lot of sense there. Obviously, gold is when you think about the gold, it's not you know, it's a nice tool. Let's put it that way. You know, it's a nice tool. And so why would they even want to surrender the gold? Central bank gold buying shows no signs of slowing down. So why would they give it away, you know, for a piece of paper? That, you see what I'm saying? That's my logic to it all to begin with. Why would they give it away if they're buying it like it's going out of style? Why would they automatically want to give up their gold? And that's what it would take, is exactly what you're saying. So you are hitting it right on the head. Exactly. Like, why, as a gold again, like, was the dollar before Nixon, question mark, right now it's just CHF, sure, I think 25% of fixed to gold, but if they will do it, no funny game. Yeah, I don't see it. With that currency and no helicopters with money for government. No, they can print. They just keep on printing. Look at Turkey. You know, I mean, you know, the Turkish lira, Euro Turkish lira has gone from 1 to 20. So, I mean, you know, they can keep on printing. Problem is that it generates inflation. And so, you know, the classic wheelbarrow and, you know, a pile of money to buy bread, you know, in the Wehrmacht and all that other stuff. So when you're the world reserve currency, you're printing more money than the people in your country need, which generates inflation because the rest of the world's using it. Now, remember, they're not necessarily buying American goods with those currency. They're transmitting other commodities outside of America. So we're not benefiting from that transaction. And so we're thinning the value of our currency down so the rest of the world can have it as a standard. And that's why Wall Street was hungry. That's why I was involved hungrily to create a euro unit. We wanted somebody else to pick up the slack. The European Union has picked up the slack to a certain extent. They are a good trading product. They, you know, unfortunately, you know, we've seen it go to all-time lows no more than 5 months ago. It seems like nobody talks about that. That's the odd part. They talk about the dollar, where right now it's enormously strong, and they keep on talking about how it's being sold, but it's enormously strong. It's at, you know, historic numbers still, in the sense of, I think the all-time high of the dollar index. Let's take a look at that again. Let's go back to the dollar index. I think it's 115 or 120 or something like that. Let's see. We won't see it here, and let me just put it back up here too at the same time. And so there is the dollar index trading at 101, right? You know, how come we don't hear people going, when's it going to break 100? How many years did I have to hear people ask me that question about the euro? When's it going to break 1? When is it going to break 1? When is it going to break 1? I mean, they used to say that all the time. Oh my God. Okay, let's put the weekly chart up. And there's the weekly chart. And the all-time high is almost 115. Okay, it's 114 and change. We're at the high end of this range when you really look at this. I mean, the product was trading at 85. What's that? That's 2018. So in the last 5 years, it's gone from 85 to almost 115. You know, it's like, so when you look at down the middle of that, I guess you could say it's par. So we're basically sitting at a 50% retracement from our, you know, low of 2018. So it's, you see what I'm saying? The logic is just not there when the conversation is that we're having conversationally. America's really hurt by being the world reserve currency. It's not helped. As much as a lot of people think it is, a lot of professionals, you know, they tell the media that. The media just refuses to pay attention to that. They keep on thinking a strong dollar, you know, ripping apart the rest of the currencies in the world is a good thing. It's not. It makes it hard for people outside the United States to buy products it only makes it easy for us to buy products in foreign countries. That's all it does. Nothing more than that. It doesn't pump up our economy. Does that make any sense to anybody out there? I'm just hoping so. We'll see what anybody says here. If JA says it, or was it Metho or anybody else who jumps in? But yes, being the world reserve currency doesn't help America. It hurts it. Now, here's a little twist off of that conversation. Bonds are telling us the answer right now. We saw 5% bonds. They're under 5% now in the short term. We're seeing the 30-year, which was up over 4%, trading down near the 3%. So obviously money is saying, don't run to America so fast. Interest rates are dropping. And that's why we're seeing, that's why we saw the dollar up into the 114.15 area. We're paying, 2 or 3% in return. And Europe was paying minus 0.3, minus 0.5. You had to pay interest to the government to own their bonds. And even to this day, Japan is that way. On the very short term, that is. The longer terms, or at least they're paying 1.5%, 2%, something like that. So that's the answer to the whole thing, really. And so yesterday's conversation, which seems to have carried over today, is that depending on who is in the BRICS, we know two things for sure. When the BRICS do finally put a currency together, we know that people are not going to be trading the Chinese yuan or the Russian ruble. We know that. They're too weak to even hold up an index. So you can't base it off of them. So, they're going to be very low percentage of whatever is done. So then who's the next one? Well, obviously not Brazil. No one's going to want to trade that either. They don't want to trade it now. So why would they trade it then? Unless they lock gold to it, and then it goes against this whole concept right there, and that is central banks gold buying shows no signs of slowing down. Why would they buy gold and then allow people to exercise their currency and take it away from them? So it's just the media going in the wrong direction as usual when it comes to the conversation. Does that make any sense to anybody out there? Please say yes or no. Let me know I'm wrong. I don't mind it. I'll take it. No, Doc, you're wrong. You don't understand. Strong dollar means you can buy anything in the world cheap. Oh, okay. Okay, how's that help America? Not creating jobs, not manufacturing anything, just being a consumer. Yes, please. Yes, it works. Makes sense. Okay, good. All right, from there we go back to the euro, off of its all-time lows. Buy some fixed rational will be nice, but it's just dream. Yeah, that's exactly it. That's what it really is. It goes against everything we're seeing. That's the thing. In other words, with one hand they say one thing, and in another they say another. It's like, okay. All right, let's get back to the euro. So the euro is off its all-time lows, just like the dollar is off its all-time highs. And something makes sense there, doesn't it? At least to me it does. And then over here, you see the same thing. And then let's put the euro up on the screen at the same time. And there is that's not the euro. What is that? That is the GBP. Okay, we left the euro. That's what it is. The euro's feeling a little pain there this morning. That's right. Just a little, nothing major. It's still in the buy. Oh, look at that. It's finally slid into the sell. Minus. Oh, now it's into the buy again. 0.00004. Nope. Now it's gone into the minus. Minus 0.00003. Ooh, wild action there. All right, let's look at cable. Cable's been very strong. I keep on always expecting it just because of the Commonwealth combination of 3 billion people involved in the Commonwealth. I saw Nigeria was suggesting they may look into being part of the BRICS. That'd be a more valuable country too, maybe. I don't know. I don't pay attention to the Nigerian currency, so I'm not really sure. I'd have to look at it. No one ever asked for the Nigerian currency. Maybe once, 5, 6, 7 years ago, something like that. So obviously, I don't know what that thing is doing. Now when they announced, just off the cuff as I go to the British pound here, when they announced that the Mexican peso might be joining the BRICS, boy, did that thing start to move, in the wrong direction against Mexico, of course. And that's my perfect example there. Announce you're going to be a part of the world reserve currency, and your currency starts to get beat up. All right, there's the cable. Cable's looking pretty good on the daily there. Over here, same situation, long march up in the buy. On the weekly here, from back in here all the way to here, confirmed with the slow. And at the same time, the daily has been in this almost a 4-week run now. 4 weeks of in a daily buy, just pushing up slow and steadily. I always give the credit to the Commonwealth more than anything else. I mean, they've got when they left, people didn't. No one ever really mentioned it that loudly. But when Britain left the European Union in Brexit, what happened was they were allowed to be more actively involved trading in the Commonwealth again. The Commonwealth has 3 billion customers, people, with an income of around 15,000 a year averaged out, whereas the European Union has under 500 million people with an income of something like 27,000. So, in other words, when you mathematically look at it and bring it into perspective, they have 6 times the population to sell to in England with the Commonwealth compared to the European Union, and at the same time, their income level is twice. So, in other words, 3 billion people with 15,000 to spend, or 500 million with 27,000 to spend. I'll take the 3 billion. You're going to get more customers out of that. So that's why I kind of lean into the Commonwealth in England and the British pound, because I see that as much more productive financially. All right, and from there we slide over to the Swiss. There it is, the Swiss. And the answer to that is, you can see the Swiss is just slowly, made a new low here. That was cool. We were expecting something like that. We knew it was going to be like, basically dynamiting through Gibraltar. It's not like they're going to knock the Swiss down too much more, because it's got to stay inside its channel. And so, we can see here that it's hanging out. That seems to be the channel right there. Unfortunately, they do not tell us clearly, now that Mr. Trump is out of office, what the channel is and what they see about the currencies, other pairs. The Secretary of Treasury, as I mentioned yesterday, Mnuchin, used to announce it once a quarter, which was interesting. It taught me things. It taught us all things. Gave us a better idea of what was going on with the pairs trades. As much as I speculated and suggested, but it was nice to hear the Secretary of Treasury of the United States actually confirm the things I was saying. So that was something I've been saying for years. And then when Mr. Trump got into office, his Secretary of Treasury was actually saying basically what I had been suggesting they were doing, and that was they were controlling pairs trades in a channel or an envelope, of some form, trying to define a range. And that's what we kept on seeing for years. Matter of fact, we Fibonacci'd that possible range. Is that me? I think that is. We Fibonacci'd that range a couple times. And we had it all set up. So that's really the bulk of it at this point, is that now we know it's the range. It does exist. We just don't know what it is. Whereas Mnuchin used to inform us what the range was, which was really nice, And that helps out currency traders to be able to trade the range, knowing that it's the official range of the central banks. Now they're hiding it again. So, all right. From there, what do we do from there? We will do. Let's see, where's it at? We will do the Japanese yen. Now you can basically say at the same time the Japanese yen does have a, they at least inform us what they're doing. Their central bank is very clear. Just got to answer this text. A14. Oop, I just have to answer this. A14. What are the strike? Gotta do strike prices. Okay, so I'm back. All right, so from the Swiss, again, like I said, I think this is the bottom end of the range, really. Let's put it up on J4X here. Oh, that's right. We've left the Swiss. But yeah, that's the bottom of the range. I think the 89 to 90 and a half area is the range. I don't think they're going to let it slip too far below that. All right, now there's the yen. Now the yen, the central bank, the Bank of Japan is very clear on what they're doing. They're always informing us. So it's kind of good. You can get a better idea what kind of range they're going to be in and what price they're paying interest to, when it comes to 1 year, 2 year, 3 year, so forth, parking money, that type of thing. And so that's the answer to that. Now, I was expecting them to roll over here, and I imagine they will. And it's hard to believe that I'm thinking that the bottom of the range here is like 125, 126. That's what I'm thinking. That's why I think when we go into weekly sells all the time, we're going to go down to that. And something's going on with the ranges. That they're more manipulated than before because probably inflation is a real tough thing to probably price into these different currencies and so forth. It's really hard to deal with the inflation factor. At one time, inflation was a fundamental. In other words, we used inflation and GDP and all those things and interest rates as a tool to measure which currency pair you would be long and which one you would be short. But times have changed now. Central banks declare what they believe the range should be, and it's left at that. I think that's what it comes down to. It's left at that. So I guess that's where I stand at this point. Is that we think that they're having a problem keeping them in the range because of the inflation. They can't see. They can control interest rates. They can control printing. What they can't control is inflation, and so it really disrupts the central banks around the world from controlling the envelope range, the where they want to keep these currencies. That's what it is. So, all right, we go from there. We go over to that fantastic Euro Turkish lira situation. You can see it's still in that daily buy now on the 7th day. We've been in a weekly buy on the fast for 4 full weeks now, 3 with both the slow and the fast. So we got some real pressure pushing on the upside, and you can see that out of all that time period, we've been in a daily buy all but 2 days. That's it. It's been in a daily buy. It's almost like the British pound in many ways, where it's been in that one trend. All right, and then from there, we dance our way over to, again, another one. These two currencies, the Canadian dollar against the U.S. dollar and the U.S. dollar against the South African rand. One was linked to gold really nicely. That was the rand. And oil was pretty well linked against the Canadian. But that also has gotten very sloppy. So let's take a look at that. And there it is. There's the CAD. And you can see the CAD is trying to... When the CAD is moving down, normally oil is going up in value. So what we'll do is we'll throw oil up over on Chicago or J4X. Right. Where is it at? I just had it in my sights. Light. That's it right there. And so oil is trying to press down a little bit here. Nothing major. I guess if we knock off Hinky for a second just to get a flavor of it. Oh, it's plus again. So that's good. Because I think it was flirting. Let's go over here back to Chicago Quant. This morning when we sent out the charts, it was below the number. So I guess what they've done is they've lifted it back up again. So there it is right there. Now, closed in the daily sell yesterday, but it is up for the day at the moment. But the weekly is also making a threat, but it's really odd. It's because we've got the fast way up high. I hope that could be indicating to me that we're heading for a peak, and we can see the slow is rolled over. So if, this will probably go sideways going into next week, and this may lift back up. So it's going to be interesting to see how the weekly reflects. And at the moment, here we are in a sell. Today is the last day of the week, really. So are they going to close it in a daily sell at the end of the day today, and the weekly will go into the sell? That's what it looks like to me. So, matter of fact, while we're here, I might as well just throw up the pink line at the same time. I can always just do a delete. There we are. And so that's the action we're seeing there. Let's save that. Okay, so now let's take a look at. I was thinking what to look at because of that on the oil side of this. What do we got here? So there is light crude. It's just dancing around on the plus side there. And I guess we'll see. It's hard to say how to predict oil. I mean, ever since that news last week, it has really locked itself in that tight range. It hasn't really exactly. There's not a lot of follow through. Let's put it that way. It's not like they ran to 85, the gap at the 80, and then it sat around the 81, 82, and then now it's sitting at 80. So it's almost like unchanged for the week in a sense. I mean, obviously it's $5 or something like that higher for the week from last week, but the trading range itself seems to have locked itself in. Let's see. I just want to see something real quick. I want to see where the stock market is. Okay, so the stock market's still down. It's not actually doing anything. All right, and then from the CAD, this is a little concerning in the sense that oil might try to break down. As you can see, the Canadian is trying to get through the daily buy as we speak right there. Now, the weekly is down for the week, and it doesn't look like it's changing anything. And you can see the fast and the slow underneath the zero line, and the fast underneath the manifold, which is screaming at us that it's oversold. Last time you saw this, when it drops underneath the manifold, here it's coming to the bottom, and then when it starts to lift through over the weeks, you can see it goes up and down, up and down. It's like a base. It's definitely a base there. All right. From there, we go to the South African Rand. And that's the, you can see here, this is very bearish for the gold, because when it's going up, that means it's losing against the dollar, and that means that they are selling gold. So let's go check and see what gold is. It did close in a weekly buy yesterday, as I noticed, and the charts going out this morning basically were not having any real issues at the same time. You can see that right there. What else can we say about that? It's down for the day. That's about it. Nothing major. And it's not, the fast is even just tightly to the manifold right there. So it's not exactly the worst thing in the world. You can see that right there. And you can see at the same time it's in the daily buy with no problem there. What is wrong with that? Now why is that screwy like that? Something's wrong here. Look at that. So it was in a buy here and then went into a sell. And it took a while for it to get back. I remember that, the 3 days. I don't understand. We'll have to check the exchange. They've changed the data on us. Can't believe they went back 5, 7 days, 8 days to change data. We'll have to double check that. But it's in a buy. That's why we throw the lines in, just to remind everybody and like immortalize it in the sense that let us all know that it's still there. Oh, what do we got here? We got Crypto Jack. I love that title. Crypto Jack. Oh, we're a big fan of the cryptos. We've been a big fan for them for over a decade now. We love the cryptos. We think they're a great alternative, Crypto Jack. I love that. Now that is a fun name for the video. The Crypto Jack. Y'all know I'm a cowboy at heart. That's why I sing cowboy songs. We're a cowboy. I live in cowboy country. We have nationally ranked rodeo every weekend. We have cattle all over the place. Yeah, barrel racing girls. Yes, indeed. We're cattle country. So Crypto Jack sounds like a cowboy to me. I like that name. Cool. Crypto Jack. That's so cool. I want that name too. I want to have a name like that, like Crypto Doc. I like that. Like in Doc Holliday. All right. From the gold, why don't we take a look at, we saw South African Rand moving up happily right there. So, in a buy for 3 days. Ugh. And so, will they really beat? Oh, look at that. The weekly is jumping up too. So we're seeing some real pressure on the South African Rand. It went into that sell last week. I thought that was finally giving us like, okay, I've gotten back out of the political problems. I'm going to start following gold. And what did they do? They just turn it around within 1 week. Ouch. Too bad. That was a great pairs trade. Gold against the South African Rand. Now it's so sloppy with politics. All right. From there, we jump over to the Mexican peso. Right there. And you can see Mexican peso making a little bounce back up. I think that's in a range also. And look at it, it's like the South African Rand doing that 1 week down and then turning back up. But look at the crazy fast moving way down. And look at the slow way up. I mean, we get some real noise going on. It's very rare to see things like that happen. They're usually like one's lagging the other, and it's kind of like, adjusts and so forth and so on. But see how here, are we really going to see that happen again? Where this turns down? It's hard to say. Maybe it's going to plane. In other words, it's going to go for like a month of just sideways action. Maybe that's what it's all about. All right. Now, let's take a look at... Oh, that's it. We finished off the currencies. That's the Mexican peso. All right, from there, we'll go back to the metal. And we'll check out silver. Silverado. And silver says, a little weakness this morning, nothing major. Looking very healthy overall. The poor man's gold, as they would say. And let's put it up on J4X. Right there. There's silver. We're getting a little curve here on the daily. And just like we are here on our daily. So there's a little curve there going on. Nothing major. Wouldn't it be nice if silver finally breached that 25.5, 26 area? It would make us feel like there's some meaning in risk and reward and metals and so forth. And since the central banks are constantly buying gold, you would assume that they would buy some silver just to hedge themselves, So it looks like today, what did silver really do? Silver yesterday it got to 25.29. So it broke the 25. 2 days ago it broke it. And today the high was 25.17. And we're just underneath the $25 area. So just that alone makes me happy that it's done that. And you see here, we went into a daily buy here. And we've only had 1 day right there. It was in a sell. And went right back into the buy again. Same thing with the weekly. We went into the weekly buy this week in here. And it's been one nice ride. There's going to be a point where we never see $20 silver again. Maybe $18. I think it's hard to believe that we'll see any of that again. The $18 area. But It seems like we do, and it seems so odd that it happens. And it's so hard to believe, especially with the inflation that we have. And that's what happens with central banks being in control, being the buyer of last resort. All right, from there we go over to copper. Copper's been in a little daily slide, but in a weekly buy. Yeah, futures are still projecting minus, minus, minus. So they lifted them to the plus for a little bit. News came out, all done. So I guess it's done for the day. Okay, there we are. There is the, yeah, look on the copper is flirting with the weekly sell. It's been in a daily sell from the 410 area. And it's just playing underneath the $4 area. Same situation here. Let's do this. Well, the daily is trying to bottom out. That is interesting. Just like we are trying to make that curve right there. Let's see what the weekly looks like. There we are. All right, what else can I say? There we are. That's the copper. Let's take a look. Oh, you know what? Platinum yesterday was fascinating. There, I put up the weekly, and the weekly on copper is, looking like it wants to hold up, but you can see here we're curving at the same time. So we got a red too. The old Doc Manhattan indicators are definitely showing us some stress. That's what they're doing. Now where was I heading? Oh, I know what it was. Look at platinum. Matter of fact, I'm going to leave the weekly up on the no, you can't do that there. That's right. So it's just a daily. So look at platinum. Yesterday, at the end of the day, they slammed it. I was like, what? Is that a bad sign for gold today? And obviously so. Because gold is down from it. Let's see, where are you at? There it is. There's the platinum. July platinum. Look at that. They slammed it yesterday, put it into the sell. The weekly is trying to curve. Boy, if they take out these lows in here today, that could put some real pressure on the weekly. And with this type of action, there might be a rollover going on going into next week. So that was a real surprise yesterday. I thought, wow, silver showing life and, days upon days, weeks upon weeks of buying, and I'm thinking now, all of a sudden, out of nowhere, they took platinum up the day before. They ran from the 998, almost 99 area, with a move all the way up to 32. So it was like a $32 move almost, a little more than that. And yesterday they started to lift it again, and they went to 36, added $4. I thought, ooh, this thing's on a ride now. At the end of the day, out of nowhere, they just slam it. Not the last moment of the day, but throughout the day they started pushing it down. And when I went to look at it and save it, I was like, wait a second here, what's this telling us? This is bad news. So for the rest of the metals complex. And you would think, we talk about it here over and over every day on one level or another. Central banks are buying this stuff. Do they really want to buy the highs? No. They want to buy the lows, or they want to buy the middle of the range. But they definitely don't want to buy the highs. And so that doesn't surprise me anyway, where they keep on putting the pressure. And, when I said like 10 minutes ago, I'm always surprised that banks don't buy silver up to hedge their gold. It probably tells us that they're going to interfere with it again and knock it down. That's probably what it comes down to. And when I've explained to many of my friends from the old days at the exchanges, or because I not only was I a trader of every major exchange in the United States, I was also in the hedge fund industry, and so all the way up into the 2000s, I was in the hedge fund industry, 2005, 2006. So I have an insight to the hedge fund universe. And the hedge funds and the mutual funds and all these institutions that are, a fund, have an incorporation that basically tells them that they have to liquidate certain items when gold and silver go up. And that's always sitting in the back of my mind. It's something I remind listeners all the time to. And that is that there's a lot of money banking on the idea that gold stay down, not go up. So in other words, we think gold is a tool to measure inflation and protect us from inflation. But instead it's a barometer that they keep on putting a heater next to keep the temperature at a certain rate, even if the rest of the room is freezing. And that's the earnings and all the other stuff, you know. They're dancing in Paris, I can see. Pension reform protests resume in France. That's so funny. All right. So that's the reason why it's when platinum starts to break down, usually it kind of leads the rest of the metals complex. All right, and then from there we dance our way over to the energies. So there's the front month oil, which is at 80.58, and then the back month right there is at 80.30. It's 28 cents discounted, where it's been carrying a premium. And then let's take a look at Brent right here. Brent, where are you, Brent? There you are. There's the Brent. So you can see Brent has been moving up firmly, but you can see our green line has pierced. We're not seeing any red there yet, and so it's kind of like the way the oil market is here in the States. It's holding firm, and you can see if we turn off the Hinky-Ashki right there, it probably looks just as sideways as this looks right there, all that sideways action. So in other words, we're not... really, the news that came out it gave a stimulation to the one, but not anything else. Slovako, hey Doc, hey Slovako, would you mind telling us what are you trading now? S&P 500, at least. Oh, and natural gas. And let me think, what else? No currency pair at the moment because nothing's really jumping out. But I think that if I get involved in anything, I would, on the currency side, I think that the Swiss could be the one to play with. In other words, if they started to sell it off, I might jump in and buy it because I think it's going to go back and down and challenge the low end of the range. Let me think what else. At least one position and reason why to decide buy and sell would be so much appreciated to hear it from a trader like you. Okay, so S&Ps are pretty much the main theme because you can do what they call zebras or back spreads for a credit, and it gives you enough delta over a 7-day period on the options. So we're option traders more, and so intraday, I'll flip it once in a while here and there for intraday, but overall, the real answer is the options market is the best place to be, or the binary market, as you would call it. How's that? Do you trade options at all, or do you just trade the underlying products themselves? Try to give me a little bit more of a flavor of what you trade, and I can be a little bit more precise. Because there's no reason to explain to you an option spread if you don't trade options. All right, now let's go take a look at the Nat Gas that we talked about right there. You see there, Nat Gas went into a daily buy yesterday, holding up fairly well today. I'm looking at call spreads into that too. The weekly, if I can get one of these weekly things to lift through the manifold and I'm in a daily buy, I will assume that we're going to get some buying, so I would line an option spread up on the long side. Talking about those zebra things again. Or back spreads, however you want to refer to it. Let's see where we go from there. And we'll give you time to put your thoughts together on the chat line. So from there, we go over to, let's do this. So there is the natural gas. Let's take a look at it over here on J4X. Let's see, where are you at? There's copper. There's nat gas in the United States. Same exact thing as here. And then what we do is, you can see it's getting towards the top end of its range, but we've seen that happen before, and it kept on rolling. So let's turn on Hinky right there, and there it is. You can see it's green for a second day. It's been the fast has been above for 3, 4, 5, 6 days now, and it took a while for it to bottom, and then it bottomed, and now we're finally starting to turn up here. The weekly on J4X right there, doing the same thing, I would assume. Not yet, hasn't joined in on the weekly because ours hasn't joined in on the weekly also. And then from there we go to the energy company down in Spain to get a flavor. We've been watching that thing trade between 28 and 27.5, which is enormously a disappointment. We would rather see it trade at like 7 or 8, not 27 or 28. Unfortunately, the poor thing is trapped. And so let's see what that's doing today in the marketplace. There it is right there. Ow! What in blazes is that? It's up $1 today from yesterday. It was trading at 27.60 and change. They've ripped it on the upside. So there's a lot of pressure in Europe. I mean, we're paying $2 basically a cubic foot. As you can see right there, it's that box there is $2.11.13. Basically $2.11 a cubic foot. Europe is paying $28, almost $29 a cubic foot. So that's extremely disappointing for the Europeans. Let's put it that way. All right, now from the energy sector, we'll take a quick look at the stock indices, and we'll call it a day from there. Ooh, what do we got? I see a message. And the message in the bottle is... Let's see what that message was. Coming in through my Dukascopy stuff here. Monday I'll be traveling. Monday. Okay. There we go. Okay. So, that's pretty much the magic of it all at this point. Let's go to the stock indices. And you're going to see here, this is the S&P 500. Right there. You can see it's been working its way down. This is the weekly, of course. It's staying in the weekly buy. But the daily is, went into a daily sell yesterday. And it's pressured down again today. And you can see we're trading in the... this is the indice itself, not the contract itself. Let's go over to the contract. You can see it's trading at 4,106 at the moment, and the index itself is obviously much lower. It's discounted to the premium. And when we go and look at it on a daily basis, let's find it on the daily basis. Where's that at? Right there. Not there. We go to there. So you can see here, that's natural gas. Let's try to find something like S&P's right there. And so it went into the sell yesterday. Let's widen this out a little bit. But the weekly's holding up very well. Was concerned that the numbers could jump out and have an effect today, but so far it doesn't seem to have any relevancy. So I think it's done and over with. And that is the S&Ps. I guess we could say I saw where the Tech 100. Let's just show you the Tech 100. That's the index that has all the modern companies in it, like Google and Amazon and Apple Computer and all those other things. Tesla and Cisco Systems and Intel and Microsoft. It's all the Amazon. All the good stuff there for what would be the modern era. And there it is right there, the Tech 100. And it's feeling some pain today too. Right there. There it is. So you can see the pressure on that went into the sell yesterday. And that's been in a buy for like 4 weeks. Not much pressure, but pressure, and we'll see what they do. Obviously, tomorrow's a big number, so no one really now that the numbers are out for the day, I don't think we're going to see any real noise after that. So, winner, chicken dinner for the first spread. All right, from there, we go over to, where do we go from there? I guess we called it. Oh, let's take a look at one other thing, the Russell, and then we'll get out of here. There's the Russell 2000. It's not really showing any strength whatsoever. Right there. It keeps on reflecting weakness. It's in a weekly sell. Every time it tries to get into a buy, it fails. Same thing on the daily. It's in the daily sell now since right here, 3 days back. It's at the low end of its range of we go over here on Chicago J4X and look at it right there. And you can see this product has been in a weekly sell a long while. When we put it in the weekly, not weekly sell, down at the bottom end of the range for a long while. See that? And it's been playing with this area. And that's the 2020. It's playing with the lows of 2020. So that's pretty tough on it. All right, traders, we're done for the day. Catch you all tomorrow, same time, same channel. So this is Doc saying, happy trails to you until we meet again. Happy trails to you, to all our trading friends. Later, traders. Have a safe and a smart trading day. And we will talk to you tomorrow.